Next scenario focuses on a family with a growing income who needs guidance on minimizing their tax burden while maximizing their investment returns. Let's dive into tax optimization for growing families. So, Sam and Taylor, two big questions come to mind as families grow and incomes rise. First, what tax efficient investment strategies are suitable for families with children? And secondly, how can a financial advisor help optimize tax planning while considering other financial goals, like college savings or that dream vacation home?
Great questions, Alex. For families with children, tax advantaged accounts are crucial. A simple starting point is the 529 plan, specifically designed for education expenses. Contributions aren't deductible at the federal level, but the growth is tax free when used for qualified education expenses. Many states also offer tax deductions or credits for 529 contributions. A more advanced option is to use whole life insurance. A competent advisor can explain the full spectrum of options available.
Wow. So, many options. Let's go with 529 plan option for now to keep it simple. So does prioritizing 529 contributions mean sacrificing retirement savings?
Not necessarily. A good advisor can help you find a balance. For example, they might suggest maximizing your 401k contributions up to the employer match first, then contribute to a 529 plan. The key is to have a coordinated strategy.
That's a great point, Sam. It's about finding the sweet spot, right? Can you give us another example of a tax advantage strategy?
Absolutely. For retirement savings, families can utilize Roth IRAs. While contributions aren't tax deductible, qualified distributions in retirement are tax free. This can be especially advantageous if you anticipate being in a higher tax bracket in retirement.
So if I understand correctly, with a Roth IRA, I pay taxes now on the money I contribute, but I don't pay taxes later when I withdraw it in retirement.
Precisely. And that tax free withdrawal can be a significant benefit down the line.
So, thinking about an advisor's role, how can they help weave all these different strategies together and personalize them for a specific family's needs?
An advisor can analyze your current financial situation, project your future income and tax liability, and then recommend a tailored strategy. This might involve a combination of 529 plans, Roth IRAs, tax loss harvesting within taxable accounts, and even strategically timing deductible expenses.
Tax loss harvesting. I've heard that term before, but I'm not entirely sure what it means.
Simply put, it's offsetting capital gains with capital losses to reduce your tax bill. Imagine you sold a stock for a profit, a capital gain. If you sell another investment at a loss, a capital loss, you can use that loss to offset the gain, reducing the amount you owe in taxes.
So, it's like strategically balancing gains and losses to minimize your overall tax burden.
Exactly. And this is just one example of how an advisor can proactively manage your taxes. They can also help you anticipate future tax implications of major life events, like buying a house or selling a business.
So, to wrap up this section on tax optimization for growing families, we learned about the power of tax advantaged accounts like 529 plans and Roth IRAs, the concept of tax loss harvesting, and how a financial advisor can help weave these strategies into a personalized plan. They can also coordinate with other professionals like CPAs and attorneys, ensuring everyone is on the same page. This is especially important for larger financial decisions such as investments. The key is to be proactive, not reactive, when it comes to tax planning.
It's definitely more than just picking investments. It's a whole ecosystem.
Absolutely. Our call to action for our listeners today: research tax advantaged accounts like 529 plans and Roth IRAs, and don't hesitate to seek professional advice to develop a tax optimized investment strategy tailored to your unique family situation.